Hey, welcome back to another weekly review. Quint, I really like the article you sent yesterday about kind of bottle this up and enjoy this time period. It's been a wild week. Fed, interest rates going down, market reacting accordingly. Talk about it.
Well, it's been a wild couple of years. And, I was talking to somebody yesterday afternoon, relatively new client, and they were like, holy cow, markets are unbelievable. Like, I mean, candidly, they were like, you guys have made a lot of money. And I'm like, well, listen.
Yeah.
I said, let's bottle that up because it's not always like this. There's a lot of volatility. And then I got off that call and I was like, I need to write that. And I think that's important because so often we're writing about, hey, in the face of this uncertainty, in the face of this, in the face of this, let's remember this. Let's focus on this. I remember in the midst of 2022, AI was really, becoming a thing. It was becoming more and more known. And I remember writing a piece in the middle of that. I need to go back and find it. But I was like, listen, the markets are declining. This is happening. But over here, this is also happening. And this is why we are not so negative. This is why we're holding our positioning and we're not selling here and so forth. So it's nice. You'll never see me high-fiving, oh, isn't this great? It's like we're working harder now than ever, right? Making sure we're positioned accordingly. But it's nice to take a breath and say, listen, it's been great. It's been a good year. Even things that haven't performed that are now coming to life, like small caps, emerging markets, dividend-paying stocks. I mean, diversification, right, is now starting to do well. And so take a deep breath. It's nice to see the Dow at new highs and really, truly to congratulate. Like, we have a lot of clients. We've grown over the years, and it's so nice to have a clientele that trusts our views, believes in our work, and through the uncertainty and through the challenges. And I know it's not easy. I watch our portfolios go up and down, and you're like, but to trust in the process, to have a long-term time horizon. And I thought it'd be nice to say bravo to you, client. So bravo to you, client.
Yeah. I mean, I have been in this business now 4 years, saw the tail end of COVID, then going through 2022, then 23, and now 24.
So in market years, that's like 10.
Yeah, exactly.
You're already getting a receding hairline. Listen, it happens.
Yeah,
let me tell you.
I get it. Yeah, so it's been a crazy ride. But let's talk more about the Fed and what that means, because I think the markets have reacted favorably to them reducing those interest rates, having maybe a larger cut than many people thought, going 0.5% instead of 0.25%. Why are they doing that? Why are those interest rates coming down? Because I think it's a two-sided coin for this.
It sure is. And you'll notice at the end, that last paragraph of that, I said, we're going to enjoy it. Something I'm a paraphrase. We're going to enjoy it while it's here, but we're starting to kind of, take steps back a little bit. Right. So it's interesting, leading up to this cut, there was a slight probability increase on the 50 basis point, or 0.5% above the 25, leading right into the cut. It was just about equal. And we watch those. We can handicap. It's like watching a tote board at Keeneland, for those of you that are around the Lexington area, or if you've ever been to a track at all. Right up until the race goes off, those odds are moving, and they're constantly moving. They're moving based on the money that is placed on a various horse. So if in the last few minutes somebody comes in and puts a ton of money on somebody who's 3-1, they may go off 9-5. They may go off 2-1. It might bring the odds down. And so it's the same thing in the bond market. People are buying and selling bonds based on what they think the Fed is going to do. So there's always this positioning. We had a caller on our podcast or maybe at the radio show, I don't remember where it was, asking about, why do people speculate? Why don't they just wait? Well, if you're running a pension fund or a sovereign wealth fund, you want to try to position accordingly. You can't wait. That doesn't work. It's not your responsibility to wait. You have to make decisions accordingly. So we can watch that, and it was very close to even. But you're right. The sentiment that the anecdotal, just in communicating with, nobody really thought they would do 50. And the reason they didn't think that is because Jerome Powell's been very close to the vest about reacting too aggressively, the fear of more inflation. And it's been our position all along. We've written about this continuously. We feel the Fed's behind.
Right.
And we're not alone in that thinking. Their 50 basis point move sort of admits that. They kind of came out and, their actions speak louder than their words. So they kind of, in the press conference, he was like, nobody should read into this. Well, everybody reads into
Right,
it. Like,
exactly.
That's ridiculous.
Yeah.
Of course we're going to read into it. So 50 basis point cut was a way for them to say, we got some ground to make up. Now, why? Because the economy is changing very quickly.
Yeah.
Mortgage market is basically screeched, is at a halt. The housing market is at a halt. And they've got to reignite that. They've got to try to unemployment is starting to pick up. And so they're trying to get ahead of the economy slowing down considerably. And so stocks, naturally, even though it was the tote board set of 50-50, that's the bond market. I think the equity market was more thinking 25.
Right.
And so the fact that they did 50, the interesting thing is right after that happened, there was a quick spike in the market. Not that anybody watches this too closely. We certainly do. There was a quick spike in the market. It sold off. It actually turned red for the day. Ironically, that's not that surprising. You see a lot of these initial head fakes. It takes people hours to process. It takes, again, these massive institutions, CalPERS, Kentucky Pension, you name it. They're going to process this information. They're going to take time to dissect the press conference. And international markets as well. They're going to trade overnight. So it makes sense that it took some time for the reaction to transpire and the real move to kind of set forth, which did on Thursday. Propelled markets to new highs, Dow to close at a level it's never seen before, 42,000. I think on its way to 45 and 50 ultimately, but I mean at some point, we don't know when that will be, but ultimately now we're getting a little pullback on Friday as we cut this, also to be expected, and now we'll see what happens from here. We're moving pretty quickly through the month of September, which is traditionally a negative month. And what's interesting is it's not turning out that way. And money managers who may have been on the sidelines or cautious, or let's say hedge funds, they're like waiting, September, October is usually a negative month. We're coming into the election, all the things. Well, they might have to play some catch up now into the end of the quarter. So it's going to be interesting. But nothing really has changed in our view. We do believe the Fed's behind. The 50 basis point it validates that. We think they'll continue to cut. That in the short term and maybe intermediate, call it, again, another year, right? 6 months to a year, which has kind of been our playbook, is bullish of stocks. I mean, it really, it traditionally is, academically it is, economically it is bullish for stocks. But why are they doing it? They're doing it because of the economy. That is concerning to us. We are concerned by that. And so we'll look to do exactly what we did several months ago. As markets reach new highs, we'll probably continue to peel back and take more cautious positions. We have to be careful in taxes and all the rest of that stuff. But we'll continue to kind of take a step back because ultimately we do believe the economy is sort of, more powering than the Fed, and we can have some challenges ahead. But again, we think it's later, 26
but I think
or so,
there's no
25,
doubt
26.
that we still have volatility.
Gosh.
Especially going into an election where we have a couple months until that starts to resolve, we're going to have volatility. There's going to be ups. There's going to be downs certainly as well, and we're kind of staying the course and obviously watching that closely for that expectation that later on in 2025 we see some issues.
And Logan, I want to make it very clear, there's areas of the market that, irrespective of an economic slowdown, will do well.
Right.
I mean, we're not putting the AI technology genie back in a bottle. It is not happening. And so that's actually the one thing that could, get us out of the economic challenges that we see. Now, what that might come is a cost of unemployment. That might come at a cost of challenges. But this morning, for instance, there's news in the energy space about nuclear. I think it was Microsoft did a deal, I think it's a 5-year deal with a nuclear company to power their AI movement, like their server farms, et cetera. That's thrusting the nuclear companies and energy space higher this morning. Well, that's we think going to be a theme for a long period of time. How do we power all this AI stuff? So as investors, we're always looking for that next, kind of movement in the economic process. We talked weeks ago about NVIDIA. They're selling the chips, but who's using them? So there's still fascinating opportunities that we think can be very, very profitable. So even though we're like, we're backing off, it doesn't mean we're going to hit the button and climb into the cave and go, right. Because that just, what if we're wrong?
Right.
What if AI, is the movement and technology soars forever? I know people who are still on the sidelines from COVID. COVID is it, and now, and then we passed COVID highs, and I know I'm running long here. I'll finish up in a second. But now their mindset is, well, when the big pullback comes, when the crash comes, I'll get back in. No, you won't.
Right.
You won't.
Right.
You won't, because when it does come, you got to buy into the blood and the agony and the challenges of what's happening before you, and there'll be something new, and you won't.
Right.
So stop trying to time the market, right? Stop this all in, all out nonsense. Got to end. Anyways, I'm done. I got off on a tangent there. Sorry about that.
It's great. It's been a very interesting ride. We're glad you guys are along with us. Have a great weekend.